Hey there, I'm Apple Crider with Investing Simple. In today's comparison, we're breaking down the two popular investing apps, SoFi versus Stash. These investing apps are particularly appealing to the youngest generation of investors. In this review, we'll be breaking down the core features of each app, what sets them apart, and which one is going to make the most sense for you. Now, although it's pretty standard across the industry at this point, neither of these apps is going to have a minimum to get started, nor are they going to charge you any kind of commissions when trading on the platform. So let's start off with SoFi. When we're looking at SoFi, what we're gonna find is that this platform is a lot more than just an investing brokerage, okay? They've got a lot of different arms doing a lot of different things, kind of a one-stop shop for all of your personal finance needs. So you've got things like investing, banking, credit cards, loans, pretty much a full-scale banking operation going on at SoFi. The only difference is it's all online and it's a heck of a lot cheaper than going through your traditional legacy banks out there. And this platform has been getting a lot of traction lately, and a lot of that is due to their very simple user interface. It's very easy to use. They've got a very responsive app, and all in all, it's very tailored towards younger investors and younger people who kind of want this single solution for all of their personal finance needs, from things like student loans to getting an auto loan to a mortgage to a credit card to a bank account to an investing account. All this stuff in one place is very attractive to younger people like me who want a single solution for all of their problems in one place. So starting off with the investment arm of SoFi, what we're kind of looking at here is the ability to buy stocks, ETFs, and cryptocurrencies individually, or you can opt for an automated investing solution where you answer some questions, work with an expert, and they get your portfolio designed for you and kind of working on autopilot so that you don't even have to think about it. Now, if you do decide to go your own way and invest on your own, kind of make your own decisions, you're gonna have access to fractional shares, or what they call them on the platform is stock bits. And with these stock bits, you are able to buy fractional shares of individual companies. Not all companies, but a lot of big companies that you're going to want to invest in are going to have fractional shares available. And these are in $1 increments. So you could buy just say $1 of Amazon or $1 of Google without having to pony up the $1,000 plus to buy a full share of this company, which is very useful for investors with smaller balances that want to diversify their portfolios without needing to put thousands of dollars in there just to buy shares of different companies. In addition to fractional shares, you're also going to have access to dividend reinvestment, which allows you to pump the dividends that your stocks pay you back into more fractional shares of the company, allowing you to take advantage of compound interest and increase that growth rate over time. So that's kind of the investing arm of SoFi, but there's also this whole banking arm of SoFi called SoFi Money. And with SoFi Money, it's essentially a place where you can put your money on the sidelines that you want to be earning interest, but you're not quite ready to invest it into the stock market yet. You're also going to be able to get a completely fee-free checking account from SoFi, and you are going to be able to earn potentially up to $150 in sign-up bonuses when you get started on the platform. So if you use the link down below, you're going to see instructions for how you can earn up to $150 in bonuses on the platform. But essentially how it works is if you put $250 into this account, they're going to give you a free $25 just for getting started, no strings attached. Next, if you direct deposit at least $500 into your account, they're going to give you another $75 absolutely for free. So now we're up to $100 free from SoFi. The last $50 is going to come from a match that they're going to provide you in the spending that you do on your SoFi debit card. So they do this thing called roundups, and so they're going to match the first $50 in roundups on your debit card. So all in all, a potential for $150 for free, again, when you use that link down below to sign up for SoFi. Beyond that, they've also got a 2% cashback credit card that's not going to charge you any kind of fees, and they give you the ability to work with certified financial planners without any additional cost. So this is a super beneficial platform. They've got a lot going for themselves, and it's really aiming to be this one-stop shop for people when it comes to their finances. Now, let's pivot into Stash. So Stash is a similar company, okay? They're also aiming to be kind of a one-stop shop, but they don't quite have as many bells and whistles as SoFi has to offer. They're also not going to be free, but we'll dive into that in just a second. So like I said, with Stash, you're also getting a kind of a holistic financial platform that's going to give you banking and investing in one location. They also provide you with some cash back, which we'll get into in a little bit. So starting off with the investing side of things, when you sign up for Stash, they're going to ask you some basic questions about your goals, your risk tolerance, and your experience with investing. Based on the answers to those questions, their algorithms are going to spit you out some advice on how to potentially get started with your investing. And then from there, you're going to be able to buy fractional shares, same as you would with SoFi, of different companies and ETFs that you want to invest in. However, on Stash, there is no access to cryptocurrency, so if you want to invest in crypto, your best bet for that is going to be SoFi. Similar to SoFi, you're also going to have access to a no-fee online checking account. However, you will not be earning any interest from the balance in your Stash checking account. It's just kind of sitting there on the sidelines for when you want to use it. Additionally, with Stash, you are going to get access to some financial advice, but it's not going to be quite as comprehensive as you would see with SoFi. We're talking like basic investment questions and a little bit of budgeting stuff with Stash, whereas with SoFi, you get a little bit more comprehensive. And then additionally, with that checking account, you are getting a debit card that's going to earn you stock back when you spend on it. So essentially how this works is when you shop at Amazon, you're going to get stock in Amazon in your Stash account. When you shop at Walmart, you're going to get Walmart stock back in your Stash account. And so the rate at which you earn rewards is going to vary from time to time and depending on where you shop, but it's going to range anywhere from less than 1% all the way up to 5% stock back on your purchase. So it can be a pretty beneficial thing to start earning some rewards from your debit card. If you have a debit card that you use right now that doesn't earn rewards, maybe switching to Stash might make some sense for you. But like I mentioned, Stash is not free. So there are 3 plans that you get to choose from: the beginner plan, the growth plan, and the plus plan. So with the beginner plan, you're getting everything that we already mentioned, but you're not getting access to retirement accounts or custodial accounts. With the growth plan, you are adding access to retirement accounts. So retirement accounts like IRAs and Roth IRAs are going to allow you to save on taxes if you are saving for the long term and for retirement. So if you're saving for the long term, it might make sense to upgrade to the growth plan, which is going to be $3 per month, where the beginner plan was only $1 per month. Now, the plus plan, on the other hand, you're going to have access to everything from the first 2 plans, plus access to up to 2 different custodial accounts for your children. So a custodial account allows you to invest on behalf of your children. If they're too young to invest themselves, you can get started investing on their behalf. So you can put money into these accounts now, let it grow over time, and then by the time they are older, they'll have some money waiting for them to use for college or whatever they choose to do with it. Now, the Stash Plus plan is going to be $9 per month. And unlike SoFi, there is no sign-up incentive or sign-up bonus when you get started. But if Stash makes sense for you, you might want to do it anyways, even though there is no bonus. Now, overall, I find that SoFi is just a more comprehensive platform. There's more stuff offered there. And frankly, I think it's a little bit more user-friendly than Stash is. However, for some people, Stash might make more sense to use. But I always say you can't beat free, and SoFi is free to use. Either way, both platforms are very accessible, so it doesn't hurt to try both and see which one is best for you, which one makes the most sense for you. And links for both of those will be down below in the description and pinned comment for you to use and get that sign-up bonus with SoFi. But if you want more information about SoFi versus Stash, there's a whole lot that we weren't even able to get into in just this video. We have a fully comprehensive article going on over at our website, investingsimple.com. Now, the best way to find that is to go to Google, type in SoFi versus Stash, and click on the link for Investing Simple. We will see you over there.